Hey everyone, Dan Peterson here with the Peterson Partners team at Berkshire Hathaway. We've got a market expert, Jeff Abel with Fairway Mortgage here, and just kind of want to get a state of the union of what's going on in the market as far as interest rates. I know there's been a lot of things going on the past week. So I wanted to reach out to Jeff and just kind of get some inside scoop. So Jeff, tell us a little bit more about what's going on with interest rates.
Good morning, Dan. So, thanks for the opportunity. In a nutshell, there's a lot of inquiries, a lot of obvious misinformation. Um, what's happening right now is we've had some unprecedented events that everyone knows all those details about. We're, as an industry, trying to do a couple of things. We're trying to understand where the market's going. Um, the folks at my company that try to set rates every day are in, I think, a place where they're trying to collaborate with other folks in the industry. Let me back up a little bit. We've had a lot in the news. Zero interest rates is a great example that just happened on Sunday, where the Fed lowered the federal funds rate. And that simply stated is what banks use as a interest rate when they're loaning money back and forth to each other. It just provides liquidity in the banking marketplace. It is not directly tied to mortgage rates. Mortgages are tied to their own set of financial instruments, mortgage backed securities, they're called. And so those tend to move in opposite direction with stock markets. There are different types of instruments there that have different levels of risk. So, in I'm trying to figure out the best way to simplify it. Um, right now, there's so much volatility that everyone's a little scared to price super aggressively. Initially, we saw some excellent rates, but it was literally a flash in the pan. We were able to lock just a handful of people. Nationwide, that's a lot of people at super low rates, but we really only had a couple of days of that going on before, like this virus scenario, things tend to or have tended to unfold minute by minute. But in a day by day standpoint, we're struggling to figure out where the market is. And so, what's currently going on, we're a little bit higher than what people are expecting. Being the mortgage market in general, they're looking for rates in the threes and twos. And I've even had some folks very innocently ask, well, can I have your zero interest rate program? And, that's just, it's just lack of information is really all. So that's kind of why I was thankful for the opportunity to talk to you about it. So we're up in the high threes, low fours, generally speaking, for 30-year fixed mortgage rates. And I could say there's a lot more to each individual scenario to say what exactly is your rate, but that's about where we are. The expectation,
And historically, those are not bad rates, though, either, right?
they're fantastic.
Yeah.
That's all you need to do is look back a little ways. We had some great rates that resulted from another economic meltdown, which was the recession that began in 2008. We're kind of back to that sort of rewriting playbooks, and this seems possibly even bigger, but it's not completely. The nice thing for you and I, Dan, is that it's not centered around real estate prices. We're at a totally different place right now from the standpoint of housing supply. So that makes me feel a lot better about where my real estate partners are, where you are in this equation, because people still need a
People,
home, a place to live.
yeah, people still need housing, and we've actually been still pretty busy. We're taking a listing today. We listed one a couple days ago. We've already got an offer on it. So we're seeing buyers out there. I think the people that are out there are the serious buyers, um, who probably need to make a decision. But also, I think there's people out there who are looking to take an advantage of the opportunity right now, because a month or 2 months ago we were really in a bidding situation and
Hmm.
low inventories. But now we've got we still have a low inventory, um, but the buyers that are out there, I think, feel like, what, now's the time to make a deal, because I'm not competing with some people that might be sitting on the fence right now. So it's
Yep. Yep, I agree. And you know, we've we've adjusted the way we're working. I think some homeowners are trying to figure out, how do they want to sell? How do they want to buy in this new, if you want to call it a new normal? Um, but we've been busy as well. I'm still getting phone calls from folks that are saying, "Is my pre-approval still good?" Um, so those are great questions to answer, and the answer is yeah. That we're business as usual from all standpoints, except for trying to on a daily basis figure out where the rates are going. And I touched on that briefly. Right now, they're higher than they were a week ago. Where do we see them going? Ultimately, we see them staying pretty stable throughout the rest of the year. All the talking heads and folks that I find some logic in their message are saying, these underlying conditions, your restaurants, the folks that are really impacted, um, it's going to take a while to get through. So there certainly is not any real incentive to raise interest rates. We're not fearful of inflation. We're fearful of deflation. So I can say, or I reassure folks that we're going to be in a pretty good position as far as financing. Folks are going to be in a good position for getting cheap money, and that cheap money, 4% is cheap. So um, it should be a good prop for the housing economy. And again, where we are from the housing supply, um, I see every reason for people to jump in and take advantage of or move forward with. If it's the time to move and to buy, don't wait because you think that rates are going to get lower or because you think housing prices are going to go down. I don't see either of those happening anytime soon. It might be the opposite as far as housing prices, in fact. So I think that's probably going to continue in a very reasonable manner of that slow appreciation that we all enjoy as homeowners.
A lot of times you see when the stock market's a little bit more volatile that people tend to put money into the real estate market. So I agree with you on that.
Right, right. Some of those fixed assets. It's funny that you bring that up because normally stocks and bonds move in different directions because they're different risk profiles. When people are feeling confident, they move their money into stocks and want to ride that bull wave of growth. And when people are fearful, they put their money in bonds. And because they're safe, those are government treasuries and real estate backed securities like mortgages, those are relatively safe. Well, things have been strange right now in the fact that they've both been going down. And so they're moving, we're all speculating, where's that money going? And some's going into cash, but a lot is going into other fixed assets. And those things, very simply, are gold and real estate. So, um, yeah, you're right. That is a good place to have equity right now, and or at least to have ownership at a very base level. So, one of your questions you asked me going in was where do what suggestion would I have for people that are on the fence? And I think I touched on that a minute ago. Buy a house. Um, Mortgages have never been better, broadly speaking. We're not at 2%. Again, I want to pass that message along. Um, but it's a great time to finance and to buy.
Yeah. Okay. Well, good. All right. Any questions for me before we wrap up?
Um, well, I talked to you yesterday. I was just wondering how activity level was going. I'm interested to hear that you think a lot of folks have, the serious buyers are out there now. There's a little less competition with those multiple offers. So tell me a little bit about what you've experienced just this week.
Yeah, I mean, this past weekend, we were with several different buyers out looking at homes. We're getting a lot of messages from people. I think now that they've got time, in the house, they're looking on real estate websites, send us properties. Hey, what about these? What about these? And we've adjusted too from a marketing standpoint because I know some people don't want to go out, so we've implemented virtual showings that we can do, virtual open
Okay.
houses. So, our team is already adjusted. We've already had the tools for years to be able to do this type of video conferencing or anything live. So it's not really a big impact on us to have to learn new tools or bring in new tools. We've already been there. So for us, it's just, hey, we're still out there marketing, we're still out there selling, adjusting a little bit here and there for the current situation. But yeah, everything's still rolling.
Yeah, that's good. The adjustment for what we're going through now, I think we're both fortunate. We're not necessarily tied to any one office space. Our team very easily adjusted to working from home. A laptop and a computer is all we need to serve the folks that we work with. Again, business is um, marching along as it always has from that standpoint. Most of our underwriters and processors and closers, many of them, I should say, not most, but many worked from home to start with.
Yeah.
So that's completely no disruption to them. We've had to move a few team members um, and help them adjust a little bit to this new environment, but it was really not so bad.
Yeah, I agree.
Yeah,
All right. Well, thank you. This was very informative. I'm glad we had the chance to talk and just get a quick update of what's going on in the market.
excellent. I appreciate the opportunity. Financing questions, I hope folks will call us. There's no dumb questions out there because there are some things that are unique right now, but we've got answers.
Yeah. And what's your phone number for people to reach you?
So direct 770-656-9172 or on the web at fairwayatl.com.
All right. Awesome. If anybody needs to reach our team, my phone number 404-234-6699 and petersonpartners.com on the web, Peterson, Petersen, partners.com. So, all right. Well, thanks, Jeff. I appreciate it. And let me know if you need anything going forward.
Thanks for the opportunity, Dan. We'll talk to you soon.
Take care. Thanks. Bye.
Bye bye.